Hi, this is Randy Finney with Right Side of the Chart, and today's Monday, March 12th, 2018. Wanted to do an update on the markets. I'm seeing some things today, some potential developments in the market, a little bit new, some of the things that maybe I've talked about before, but here's what I wanted to point out. First off, normally I don't cover any official trade ideas on Right Side of the Chart with the general market analysis. That's public free content, but I've been covering, as SPY is SPY is one of our official trades. I'm going to talk on this one. Again, it's a broad market trade on the broad market. And what has happened today is, and I posted this in the trading room earlier, that we fell after the open. We fell 1 penny shy of the final target T3. Now, here, let me just show you quickly a 1 minute chart. So this was today's Friday's close right here. You can see. Excuse me, pause the video there for a second by mistake. Here's that Friday's close, that yellow dotted line. We ripped up, and I rarely do this, but I started to compose a post getting ready because this one was headed straight up, looked like it was going to hit our final target, and then reversed 1 penny shy. The high for SPY today was 279.91 versus this target that I've had back here. I mean, we bought in back right around this level. um, I talked the, bullish talk and going long personally here, but this is where I had the confidence to add it as an official trade on that pullback to test that support level. And, we ramped right up from there, hit the first target, went on to hit the second target. This is where I posted, booking my profits when that second target was hit because I thought at the near term we're stretched due for a pullback, and we did. We've corrected. We had a little chop action, and we moved back up. But what I've been stating and continue to believe is if and when we hit this final target, 279.92, that will be it. I will close out the official trade. Although I still do expect the SPY, the broad market, to go on and make new highs. Now, the reason for that is, trading is all about risk reward. Risk a dollar to make $3 or more. Don't risk a dollar to make a dollar. If you do that, you have to have a very high success rate. Obviously, if you're 50-50, make a dollar, lose a dollar, you have to get more than 50%, well over 50% of your trades right to get ahead. Otherwise, you're spinning your wheels. All right, so uh, here's my thoughts. Uh, Quite often, when I see a trade reverse just shy of my targets, comes really close, it effectively means that target's been hit. Now, I'm not considering this trade. It's not closed out. It's not successful yet. I sometimes I'll revise a trade if I continue to see some things that I don't like here in the market. I may close this trade early, and that means I'll put out a post to the members and saying, we're going to pull this trade wherever it's at. If I pulled it right now, I'd send it out at, say, all right, we're going to close it out now. It's at 278.52. Not doing that yet, but here's the thing. I always set my price targets below the actual resistance level that I think will get a reaction. Here's a line. If you see the pop-up box, 280.10. Why that level? Why 280.10? Why did I pick this target, weeks ago, over a month ago? I did so because of the how well that level looks here. Let's just take a look. We have a gap right here that started shortly after the trendline break. This is when I posted, sell signals confirmed on the U.S. equity markets when these trend lines that I was watching on the 60-minute charts broke. Everything else, the case was made there. And even before that, we had a reaction right here. That level, what was it, 280.10, I think I just said. We had several reactions on that line there. Then we broke out. This was a breakout. So that was resistance back then. We broke out, and that was a failed breakout. We gapped down below it, and the fact we gapped right below it, that makes it even more significant. I'll get to some action we had in QQQ recently, and it'll remind you of this almost in a mirror effect. QQQ just recently gapped up above its a key resistance level. So we gapped down below that support level. That helped to validate it. And from there, we had very impulsive selling, which further validates that as an important support level back then. So bigger picture, this was a failed breakout. This whole thing right here was a failed break of this level. And once that breakout failed, you had the impulsive selling. Therefore, I thought I always adjust my orders down because I don't want to try to, eke out the last few pennies of a trade just in case the sellers step in early if a lot of eyes are watching that level. So Instead of 280.10, that target was adjusted down to 279.92, which I thought was a comfortable amount below it. But again, we fell 1 penny shy of that after today's highs. Um, Maybe that's it. Maybe we get another thrust up. Normally, I wouldn't sweat it too much if we fell a penny shy in reverse because we're not down much. The SPY is only down 0.14%. QQQ is up 0.5% today. The small caps are up 0.18 as I do this video. It's about a little after 3 Eastern time now. So, on face value, this doesn't look so bad. But what I'm not so crazy about, I can see the PPO turning down here, poised to make a bearish crossover. If it does make a bearish crossover, if we continue much lower, and I'm going to go over some support levels to watch, we will have negative divergence from this high back here. So what we had is this reaction high, we pushed up, we had a divergent high right here, prices making a higher high with the indicators making equal or lower highs. That's negative divergence. There it was back then. And so from this point back here, forget about this reaction high. This is the larger divergence that I'm talking about now. And I talked about this on the small caps the other day. In fact, all the indexes. I told you we didn't have negative divergence at the time on SPY, but now we have potential divergence. We don't have it. You can see the RSI did make a new high here on the on the RSI. But there's a little caution in order right now because look what happens here. When you get overbought on these short-term time frames, I'm going to circle all the overbought readings recently, and here they are. So we're overbought right now. We were overbought right here. We were overbought right here. And the last time before that, we were overbought here. Overbought, as I often say, in itself is not a sell signal. It's merely an indication that prices have maybe gotten too far ahead of themselves. I prefer to see divergent highs, an overbought reading followed by another one. Um, Ideally before positioning for a swing trade. But you can see what happened after each of those overbought readings. Some corrections were larger than others. And so there's my concern number one. I also said that the PPO is poised to cross over. If it does, it will confirm this divergent high. So that's also a concern. I'm not going to pull this trade early. Sometimes I will. What that means is for example, the SPY is trading at 278.65. And I may do this later today. I may do this tomorrow. Close the trade early. We already hit the second target. I think there's still a good chance that we can burn through these divergences, take that target out, and also go on to new highs. But I'll close the official trade there just because I think the risk reward is not worth it. I see new highs, but if we take out the previous highs, maybe 3-4% upside. Hard to say right now in the markets before the next big drop. So it's like picking up nickels in front of a steamroller. I don't want to, I'm just going to close this trade out here on the site if we get there. Now, levels to watch. What will firm up the bearish case? Well, you can see I've added a trend line here, this yellow trend line. You have several reactions. It's a what I call a minor trend line. It's not super significant. There's only a few reactions, but it's worth watching. And then below that we have this gap right here. Gaps. There's an old saying in trading that most gaps are usually backfilled sooner or later. Here's a gap that was backfilled. So if we take out this trend line, I'm actually putting a little more significance into this gap, and that's represented by these two lines here. So watch that level. If we pull back, we could bounce off the top of the gap. Tops of gaps often act as support. But even whether we bounce initially or not, I favor a backfill of the gap if we take out this yellow trend line. And so there's a little downside on SPY. Again, if you're a long-term investor, nothing really to be concerned about at this point. If we backfill that gap, that's only about 1.5% lower on the S&P 500. And with what we've seen in recent weeks, that's just a run-of-the-mill move lately with volatility once again picking back up. So that would be level number one. Um, There's another level I have right here. If that gap is taken out, forget about these lines right now. In fact, I'll leave those on because that's the former first target. This level I'm looking at here, right about a little below 270. I can even move that line up a little bit there. Yeah, tighten it up around 269.90 or so. What I see there is we had a couple reactions back here. Reaction low, reaction low, reaction low. Then we broke below it, and then we came back and tested again. So this to me is probably one of the most significant support levels now. If we do pull back, we do take out first this trend line, then the bottom of this gap. Look for 269.90 to hold. I think it will. I still think we're going to see new highs before we take out those lows back from early February. And that would be if the charts confirm at the time, maybe a good time to re-enter a long position or add to a long position in SPY. Again, I'd much rather see us get out now, hit this target, this first target in the next day or so, get out and just sit back because I don't like these potential divergences. But as you can see here, if we get any more downside on the SPY, we're going to have confirmed divergence. But we don't have to. Just because it looks like we're about to have a bearish crossover, you can see what happens. Sometimes it looked like we were going to have a bearish crossover here, and the PPO line bounced off the signal line and continued higher. So that's a possibility. And if we go much higher in the SPY, if we punch out, take out this target and that line I have above it, we will have taken out all the negative divergences, at least on the SPY on the 60-minute time frame. So there's the levels to watch. Easiest way for me to say this is I'm near term cautious. I'm not so crazy that we fell just a penny shy. I would have preferred to see us, hit that target, get out of that SPY long, and sit back and just kind of watch what the markets do. Do what you want if you're still in the trade. Um, but as of now, I'm going to sit tight with it, hoping to get one last thrust up, get out of that trade. And if I see a compelling reason to get out of it, I'll just close the trade out early and we'll move on. So enough on SPY. Let's just look at the other major index tracking ETFs. Here's QQQ. Similar story here. We have a divergent high in QQQ. You can see we had a reaction high here. You can see the high in the PPO. We had a lower high here that was a divergent high. That was followed by a correction. And now we've come up, taken out, made a new high here, and a lower high so far. We haven't yet confirmed that divergence. But if that divergence is confirmed, so let's just say the Q's come down. Here's a trend line. This trend line is comparable to the trend line I showed you on SPY. So I'm watching these. They're, again, not super well defined, but they are worth watching. You can see a trend line right here off the, looks like the early March lows. That's support level 1. Actually, if you really want to zoom in, it depends how active a trader you are. Support level 1 would be, you can see a gap down, today's gap. This yellow dotted line shows you this is Friday's close. So we gapped up, and so far all day the Qs have traded positive. We're above that dotted line, which is Friday's close. So we've gapped up, haven't backfilled it. So a break below Friday's close or Friday's highs would be, that's minor support. I'd put a little more emphasis on this trend line here, and then bigger picture. And I showed you a little while ago about that important support level that was broken on SPY that really triggered the big sell-off from late January into early February. And now we're going to look at this in reverse. Right here we had a divergent high, and there's of course the 60-minute chart of QQQ. This is when the selling started back here. But you had a divergent high and a correction. The Qs rallied up, tested those highs again, and failed. They pulled back. Finally, they came up, and this was quite bullish, I should say. We closed below it, but then gapped up above it. This is exactly in reverse what happened with SPY on that level I was showing you there, where we had a level tested, and we didn't just move through it. We gapped down below that support level. In this case, we gapped up above a resistance level. Why is that bullish? Well, those waiting to, wait for breakout for new highs or waiting to short that high, maybe they shorted the Qs, you gapped up above it. And that's a breakout to new all-time highs in QQQ, so then you can see the buyers step in. People love to buy new highs. Does it hold? I don't know. We might come back in and back test it. But so far, the Qs have vastly outperformed the broad market on this advance, and that's mainly due to tech stocks rallying and catching a bid. A lot of people buying the beloved FANG stocks. So levels to watch. Well, number one, again, let's watch that trend line right here, that minor trend line. And as well as that gap, they probably both go around the same time. Then we have this gap. That's a very significant gap. That's a breakout gap right there. Now, I'll tell you this. A lot of people like to look at, go long on a back test of breakout to new highs. And some people will like to short a failure. From my experience, when you come back in, sometimes you make a perfect back test of the breakout, but very often you undercut it by a little bit. And if that's the case, we have this gap to backfill here. So let me just tell you, this would be a near-term bearish scenario, but not. I mean, if you're a very active trader, and you want to try to game it, on NQE minis or QQQ, however you want to trade, you might target a backfill that gap. Right now, I don't think. I think the bid in this market's too strong. I'm not interested in shorting at this point in time. I might be very soon. Let's see. Excuse me. Let's see what happens here. So let's see if that level holds. So let's watch, see how those gaps react on a backfill. Another level to watch, and it's comparable to that level on the SPY I showed you a minute ago, where we had on the SPY we had a series of reactions on a comparable level back there, but with the SPY we came in, back tested that level once again. Let's see, I want to use this tool, and we had one more reaction there. So on QQQ, that level's about 164.70. The Qs have been stronger on this advance higher, so we never really got that second test of that level. So where I gave you a very important, what I consider an important level on SPY, this level may align with that, may not when we get there, because again, the Qs or QQQ is quite a bit ahead of SPY on this advance. So there's your levels to watch. These are the developments to watch. Looking at a potential bearish crossover, but again, we may or may not get it. Sometimes it looks like you're going to get that cross, or you'll have a slight whipsaw signal, but then the PPO continues higher. So this is it. It's a pretty a fairly important technical juncture for the markets. If we can push a lot higher, we'll burn through the divergences. We'll burn through them on the SPY. We'll burn through them on QQQ, small caps, mid caps, which I'll get to in a second. Be nice to see that last thrust up, get out of our index long, and then just sit back and watch. But again, I certainly wouldn't be chasing longs here, at least not at this point in time. We're overbought. We were overbought here. We were overbought here on QQQ. This overbought condition led to a correction. This overbought condition, remember, this came on the heels of a strong, what I thought was a strong buy signal, reason to get long. We defended those weekly trend lines on the markets. We had positive divergence on the 60-minute charts. And so you had this sharp advance up coming off very oversold levels. So this overbought reading uh, was worked off, if you will. We fell back under by sideways trading. And I always say the market can correct in two ways. One of two ways or a combination thereof, either in price, like this, or in time by trading sideways, or in some cases, a little of both. So this was a correction in time that worked off those overbought conditions. This was a correction in price. And as I often say, the reason that I don't use overbought as a standalone buy or sell indicator, or at least overbought being a sell indicator, is that overbought can and often does become more overbought. So if you short, when the RSI crosses above 70, sometimes you can see it get a lot higher than the 70 level or trade above the 70 level for an extended period of time, like we did back here for that bar tells me that that lasted for 7 days, a week. Okay, and to quickly wrap up small and mid caps for those of you trading IWM or MDY, we have a comparable trend line here, and we're actually testing that trend line right now. We still have, just by the skin of our teeth, potential negative divergences, may even be confirmed. I don't know if this PPO is crossed over, not clear enough yet. Whether I don't split hairs if the line's slightly below. When you really zoom in here, let me do this for you. You zoom in right here, you can see we had a cross, but it was a whipsaw signal. It was very fleeting. Yeah, there's a bearish cross right now, but I don't think we'll have to finish printing this 60-minute candle at the close today, so we could move back up. So again, I like to see a pretty clear crossover. Oops, didn't mean to move that line. There we go. Let's move that down, get back to where we were. So there it is. We're challenging the previous highs on IWM. We're a little shy of those right now. So almost a double top. There's a trend line to watch. And just eyeballing this chart, I haven't really spent a lot of time updating it, but this looks like a pretty significant level right here for IWM on any pullback. So if you're looking for this market to go to new highs, but you don't want to chase it here. You want to buy a pullback. I just gave you levels on SPY, QQQ, and you can see this level about 155.50, somewhere in the middle there between 155 and 156. That if we do get that pullback, that might offer an objective long entry at the time. When I say might, we just have to see how the charts look when we get there. I don't know if we do get there. Do we zigzag for a while? Is it a sharp move down? How do the 5-minute charts look, the 15-minute charts, etc.? But those are levels that I want to see hold. Um, if my scenario, the market going to new highs plays out. When I say the market, again, I'm talking about the broad markets, the S&P 500, the Dow. Those have been lagging. The small caps, mid caps. The only thing at new highs right now is the Nasdaq 100, which is not a very diversified index. Levels on MDY. Let me give you those. You got to watch this level here. There's certainly a resistance level there that comes in around 359.60, give or take. And there's a trend line, not nearly as well defined. There's only a couple reactions, but you can see right here, there's some pretty decent support. I have that gap marked. Again, these are pretty significant gaps right here, and there's gaps back here. So this is a support zone that I like to see held on MDY. So now taken all together, putting more of an emphasis on the large cap indices, the QQQ, SPY, but a little, also keeping one eye on these small and mid cap stocks. These are the levels I'd like to see held on any pullback. So at this point in time, let's just say I remain intermediate term bullish, looking for the markets to go to new highs. I'm I think we might get another thrust up and maybe go here, hit, pull back, and then continue on higher. That would be my preferred scenario. So short term, uh, there's some things in the chart where I may do a video tomorrow and tell you that now my outlook has changed. I think there's a good chance we're going to hit those levels and maybe even take those out. But as of now, I don't see it. So swing traders, I don't see any reason to go short here. I don't think, even though there's some building evidence in the charts that concern me a little bit. Um, I think the trend's too strong right now. A lot of people buying this dip. A lot of people want to get back in the markets. And I think this bull has a little bit of breath left in it before it rolls over. And by that, I mean we would like to see all these indices make new highs. Let's go ahead and wrap it up here. I think I covered everything that I wanted to cover. And again, if anything changes over the next day or so, if these divergences are confirmed, we see impulsive selling, I'll provide an update. And I just don't see anything right now to be overly concerned about until those levels that I focus, those lowest of the support levels on, especially on the SPY and QQQ, until and unless they're taken out, and taken out, on an impulsive nature, a big move through a 60-minute close, well below those, something along those lines. But as of now, it's just, this is the new norm. This sideways, sharp back and forth moves. Today's been a relatively muted trading day, but since this, shot across the bow here, volatility's back, and you're just going to have to live with that as a swing trader or an investor. And active traders, you can certainly focus on these levels and maybe make some quick trades, pullback trades, get long, go back long again, get in and out, especially if you're a day trader. So, and on a final point, I'll try to put up some more day trading ops in the trading room. I've had a few new members inquire about those recently, and a lot of times I don't post my day trades. I don't day trade every day, but when I see opportunities, I often do, and sometimes I'll share that in the trading room. So if you're a member, join the group, the day trading group. That's where I usually post those trade ideas. And if you have any questions on how to do that, just drop me a line, and I'll be glad to answer. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it. And as always, if you liked the video, please give it a thumbs up on YouTube. Have a great day.